Traders wave goodbye to summer calm as markets are yanked from their seasonal slump. A Goldilocks summer is all but over. As traders came back to their desk this week, they were confronted by weak data prints, AI spending concerns, and President Trump's latest assault against the Feds. There's plenty to suggest the calm won't last. Chris Beauchamp is Chief Market Analyst at IG. So Chris, let's start with Trump's move to oust Fed Governor Lisa Cook. Is Fed independence now truly at stake if he gets his way?
I think it faces greater risks than anything we've known in recent decades. There's plenty of evidence from decades ago, from the 60s and the 70s, of when the Fed was different, and when government control, if you like, or dominance was more of a thing that it is now. It does mark a significant departure from what we've known since the financial crisis, and this is the key concern, really, that if he can succeed in getting rid of Cook, and then others on the board seem more willing to do his bidding, it looks like we're in for a very different time in terms of US central banking policy.
Are markets being too complacent about Trump's threats to the Fed, especially as it risks pushing bond yields higher?
Well, yes, I suppose they are, really. This is a year in which, having weathered the storm of Liberation Day, they seem to have been able to be far more sanguine about other risks. And perhaps this time around they are underpricing it. I think it's something that you really can't stress too highly, that there is a risk here of the independence of the Fed really being called into question at a time when the US budget situation really doesn't allow for this kind of uncertainty. If the US is to continue benefiting from its exceptional status, then Fed independence is the one thing that can't be sacrificed. And I think if markets begin to fret a lot more about this, I think at the moment they see this attempt to get rid of Cook as unlikely to succeed because of the legal challenges. But I think if by some means he was able to succeed, then there would be, I think, a lot more concern creeping in among investors.
Let's switch gears now to Nvidia, and given its unprecedented weight in the US market, its earnings have become a key event. So can its strong earnings results after the bell today dispel creeping AI doubts?
Well, I still think they can. The salient feature of Nvidia earnings the past sort of 3 or 4 times has been how we gear ourselves up for this, and then it proves to be something of a damp squib. We don't get dramatic reaction. There's certainly no replay of what we had last July. So there's always the potential, however, for some kind of concern creeping in. And certainly at the moment, the big questions around AI remain unanswered. But this is a company that's managed to deliver again and again. Now, you might get some short-term disappointment, but unless there's some really unpleasant shocks within the outlook statement, I think we may get another fairly decent reaction.
On the data side, though, the Fed's preferred measure of inflation is due up this Friday. Expectations are for a too hot for comfort number. Could this sway a cut in September?
Well, I think given what we heard last Friday, everything is now moving towards the September cut, regardless of how PC shapes up. I think you'd have to have a very, very hot reading. And regardless of that, I think the focus is really on the jobs report that comes through in a couple of weeks' time. And if that really begins to show weakness, then it reinforces the cut. I think maybe markets got a little bit ahead of themselves with the pricing of a September cut, but it's still very, very strong. And I think it's still, let's not say nailed on, because there's always a potential for a surprise, but certainly the door has been left firmly ajar for a September move.
Well, let's look closer at that upcoming jobs report. And Powell did sound a lot more concerned about the labour market at Jackson Hole. Should traders strap in for a weaker jobs market?
I think they should learn to expect it, yes. The concerns are that the US economy is continuing to weaken in a meaningful way. The Fed can give it that support. Given, of course, what we had last month and the firing of the head of the BLS, then there's a very interesting time ahead for investors, all told, really.
That was Chris Beauchamp from IG. Don't forget, you can watch more videos on Reuters.com.